Welcome back to the show. Today's episode is going to run a little deeper than usual, because after everything that's happened over the last 48 hours, the sell-off, the liquidations, the panic across social media, the fear that the market is slipping into some deeper collapse, it's worth stepping back and doing a proper breakdown of what actually happened, why it happened, where things stand now, and what it means moving forward. Because if you've been listening over the last week, we talked about a market that was starting to stabilize. A market that had taken a beating in November, but one that was showing genuine early signs of recovery. We talked about cleaner structure, better liquidity, accumulation under the surface, and the first hints of confidence returning. And all of that was true. None of that analysis was wrong. The signals were real. But then, almost out of nowhere, the market rolled over and fell sharply. Bitcoin dropping back into the mid-80,000s, altcoins bleeding across the board, leverage wiping out hundreds of millions of dollars, and sentiment flipping from cautious optimism straight back into fear. And the big question for a lot of people is, how can those two realities exist at the same time? How can we have recovery signals one week and a sharp sell-off the next? Were the signals wrong? Did we misread the market? Or did something bigger happen underneath the surface? So today we're going to break that down properly. Because the truth is, the signs of recovery were real. But the drop that followed is also real. And the two are not contradictory. In fact, they're part of the same story. And once you understand that, this whole move starts to make sense. Now, let's start with the most important piece of context. Thanksgiving. Every year, without fail, the US Thanksgiving period creates one of the lowest liquidity stretches in the entire crypto calendar. People travel. Exchanges operate with smaller teams. Market makers reduce risk. Institutional desks slow down. Retail activity drops. And liquidity, the actual fuel that keeps the market moving smoothly, dries up. And when liquidity disappears, price action becomes extremely sensitive. It becomes exaggerated. Any downside pressure, even a small one, can cascade quickly. And this year, that thin liquidity window landed at the exact same moment as a wave of macro pressure. We had tech stocks selling off. We had treasury yields nudging higher. We had crypto-linked equities taking a hit. And we had spot Bitcoin ETFs recording one of their worst outflow streaks since launch. Now normally, that combination wouldn't cause a drop as big as the one we saw. But during Thanksgiving week, when liquidity is thin, it becomes the perfect environment for a sharp move. And here's what makes it even clearer. The move wasn't driven by panic at first. It was driven by mechanics. When Bitcoin slipped below 88,000, a batch of leveraged long positions started hitting their liquidation levels. And when those go, they trigger more liquidations, which trigger more. And suddenly the market snowballs downward. We've talked about this before. Liquidations don't reflect fundamentals. They reflect positioning. And right now, with so many traders trying to time the bottom, the market is full of leverage. That creates shallow floors. And on a holiday weekend, those shallow floors crack easily. So no, the structure wasn't wrong last week. The signs of recovery weren't hallucinated. What happened was simple. The market got hit during the lowest liquidity moment of the month, and it amplified everything. Now, that doesn't make the drop feel better, but it does explain why it happened. And this is important for everyone listening, especially those who felt that gut punch when the charts turned red. This wasn't the start of some major catastrophic downtrend. This wasn't the market saying it wants to revisit the depths of last year. This wasn't some structural breakdown. This was a liquidity event, a holiday-timed move, a shakeout that fed on thin volumes and fragile positioning. And ironically, shakeouts like this tend to happen very close to major inflection points. Now, let's talk about some of the bigger stories from today that set the context around this drop, because they're important. First, Bitcoin fell below the $86,000 mark as markets flipped into risk-off mode. That drop alone sent shockwaves across the entire market, triggering a wave of liquidations and a sharp sentiment reversal. But again, this wasn't Bitcoin losing its long-term structure. This was the market losing its liquidity. Second, liquidations. We saw nearly $600 million wiped out in a short space of time. That kind of flush out clears out leveraged positioning. And although it feels painful in the moment, these liquidations are often the exact thing the market needs to reset, flatten, and stabilize. Third, tech stocks and crypto-linked equities dropped sharply. And as we've said for months, crypto still behaves like a high-beta tech asset. If tech sells off, crypto sells off harder. And that's exactly what happened. Fourth, crypto treasury firms saw their valuation metrics worsen as Bitcoin dipped, putting pressure on companies following the MicroStrategy-style balance sheet model. It's not a crisis yet, but it adds weight to the market's downside. Sixth, Hong Kong and China signaled new enforcement actions against stablecoins and crypto-linked firms. Asian regulatory shifts always create volatility, especially when they target liquidity layers like stablecoins. And seventh, one of the biggest ones, spot Bitcoin ETFs recorded heavy outflows again. When ETF demand weakens, the buy-side inflow that stabilizes price disappears. And without that foundation, any drop becomes sharper. All of these stories matter, but again, they don't invalidate last week's structure. They contextualize this week's move. Let's pause here to take a quick break. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Now, let's pivot to something absolutely crucial. How to maintain confidence, how to keep perspective, and how to turn a moment like this into clarity, not panic. Because the worst thing anyone listening can do is let a post-holiday liquidity shakeout shake their entire outlook. Here's the thing. Every cycle, without exception, has these moments. Moments where the market looks like it's turning, then reverses sharply, and everyone assumes the worst. Moments where patience gets tested. Moments where conviction gets stretched thin. And moments where people make emotional decisions that cost them massively later. But here's what separates long-term winners from short-term worriers. Winners understand context. They don't react to noise. They don't panic on dips. They don't chase green candles and flee red ones. They understand that volatility is the cost of admission for crypto's upside. And more importantly, they understand that shakeouts tend to create opportunity. Now, this is where we have to be responsible. I'm not telling anyone to buy. I'm not telling anyone to take risks they can't afford. I'm not telling anyone to YOLO into the dip. That's not what we do here. That's not how long-term success is built. But I will say this. If you missed the last buying opportunity, if you watched Bitcoin dip into the 80s and hesitated, if you told yourself, I'll buy it if it drops one more time, this may be the moment you were waiting for. If, and only if, you're using a sensible strategy. Because dips created by mechanical factors, not fundamental ones, tend to be the healthiest dips. They tend to be the dips that present real opportunities, and the dips that recover fastest once liquidity returns. And here's the good news. Yes, good news. Because there actually is some today. Despite the drop, despite the liquidations, despite the fear, under the surface, we're still seeing accumulation. Smart money flows haven't reversed. Whale behavior hasn't shifted into distribution. Long-term holders haven't flinched. Exchange reserves haven't spiked. And on-chain data still shows supply tightening, not loosening. In other words, this market still wants to move higher. It's just battling a liquidity vacuum. And that vacuum won't last long. Liquidity will return. ETF flows will stabilize. Sentiment will normalize. And when that happens, the question is simple. Where does the market want to go next? And if you zoom out, not an hour, not a day, but a month, a quarter, a year, the picture becomes a lot clearer. Bitcoin is still strong. Ethereum is still strong. Solana is still strong. Adoption continues. Institutional interest continues. Development continues. And none of the long-term narratives have been touched by this drop. This isn't the end of anything. It's a test, a shakeout, a rebalancing, and a reminder that crypto punishes impatience as much as it rewards conviction. So to everyone listening, yes, this move was sharp. Yes, it was uncomfortable. Yes, it was frustrating coming off a week where the signs looked positive. But this isn't the time to lose perspective. This isn't the time to panic. And it's definitely not the time to disconnect from the market. Stay focused, stay calm, stay strategic. Long-term holders win by understanding moments like this, not fearing them. And if this is your first cycle, let me tell you something from experience. These drops feel scary in the moment, but they're forgotten shockingly quickly once the market regains its footing. And one more thing. You're early. The people listening to this show every day, the people learning, staying informed, understanding the landscape, you are ahead of the crowd. And it's moments like this that separate the people who succeed from the people who panic out of their positions. Keep your head, keep your plan, keep your perspective. And if you're enjoying the show, if you're finding these breakdowns helpful, drop a 5-star rating, leave a comment saying done to enter the XRP giveaway on Friday, and share this episode with someone who needs clarity right now. We'll be back tomorrow with another update, and as always, we will see you at the top.